Welcome everyone. I am Dr. Gokilavani, working as an assistant professor in Department of Commerce USD, Kristu Jayanti College. In the last video, we discussed about the accuracy of recording transactions. In this video, we'll be discussing about timeliness in recording transactions. About the meaning. When our financial activities are recorded as soon as they occur. So when the transactions happened in the business organization, they have to record it on time. Prompt recording is a very crucial for our maintaining an accurate and up-to-date financial records, which are very vital for the effective business management and compliance. So for an organization, recording the transactions on time will play a vital role, and it's a very huge important for the organization. So importance of timeliness consists of three important points. First one is real-time financial insights, compliance and cash flow management. So we'll discuss in detail. First point is a real-time financial insights. Timely recording of transactions ensures that the financial data is correct and accurate. And it will also allow the businesses to track their financial status accurately. And this will help the management to take the decisions based on the real-time information. So real-time tracking helps in monitoring cash flows, and also it will help the management to assess the financial impact and making a proper business strategies. That's why timeliness is a very important factor for the organization. The second one is a compliance. So adhering to the accounting standards. So in India, we have Indian accounting standards. 41 standards are there. So they have to adhere to the accounting standards, and they need to follow the regulations, rules, whichever prescribed under the accounting standards. So it requires a timely recording of transactions. So compliance with these standards will be essential to avoid the legal issues, and also we can avoid the paying penalties. So in India, we have regulatory bodies like IRS or SEC require timely reporting for the tax purpose, and also it is very transparent for the investors to understand whether the financial statements as per the standard or what. So delays, sometimes also it may result in a non-compliance and subsequent penalties. The third important of timeliness of recording transaction is cash flow management. Accurate and timely recording of transaction is a very essential and effective cash flow management. It will surely help the businesses to make enough liquidity to meet their obligations. For day-to-day activities, the companies need a cash flow management. So they need to make sure that they are recording on the time and whether they have enough money to meet their day-to-day expenses. So to have a prompt recording of cash flows and outflows, which enable the businesses to anticipate if they have any shortage in the cash or if they have any surpluses amount in their hand. So it will also facilitate the management to have a better cash management strategies. So these are the three importance of timeliness: real-time financial insights, compliance and cash flow management. The next one is consequences of delay. If an organization recording their transactions by delay, so what are the consequences will be occurred by the business organization? There are 4 points. 1. Inaccurate financial statements due to lag. Second one, cash flow mismatches. Third one, delayed decision making. And the last one is risk of financial penalties for late reporting. The first one is inaccurate financial statements due to lag. If a transactions delayed by recording their transactions, it will result in financial statements but do not accurately reflect in the current financial status of the business. So for example, if expenses are recorded promptly, now we will come to know what is the income generated by the organization. Suppose if the expenses are not promptly recorded, then there will be a mismatches and it will lead to inaccurate financial statements due to the recording of expenses. The second one is cash flow mismatches. So when there is a delayed recording can lead to discrepancies between actual cash flow and what is recorded. So whatever transactions made on the one day will have to be recorded on the same day itself. If the expenses are paid, but if it is not recorded, then surely there will be a mismatches in the cash flow management. So it will also cause cash flow management issues. The example, if incoming payments are not recorded on time, it might appear that the business has less cash available than it is actually does. So sometimes even it will affect the potential businesses to have a financial strain. The third consequences of delayed in a decision making. Because of delay in recording transactions, the financial information can hinder timely and the management cannot able to find out the information on time. So the management sometimes always release on the current data to make the strategic choices. So for example, a business might delay in the investment decisions or miss opportunities due to the outdated financial records. So which will also affect the financial position of an organization. So that is why we say it will help the management whenever the record transaction is happened, it has to be recorded on time. If not, it will delay the management to take the better decision making. The last one is a risk of financial penalties for late reporting. So many financial and regulatory reports have a strict deadlines. So even filing a returns, for filing a GST, for every regulatory reports will have a strict deadlines. If they fail to meet these deadlines due to delay in recording can result in a penalties. So this will have a loss for the organization because of not submitting their reports on time. So late filing taxes can incur the fines and interest charges, and while delayed financial reporting can make the investors to result in a loss of credibility and legal repercussion. So these are the 4 consequences of a timeliness of recording. Next is about the best practices. When an organization have a proper timeliness of recording transactions and also have a accurate transaction recording, will have a 4 best practices for the organization. The first one is a regular reconciliation. The second one is training and awareness. Third one, internal controls. And the last one is use of technology. What is a regular reconciliation means? To have a frequent reconciliation of accounts will surely help the organization make sure that the recorded transactions match the actual financial activity and maintain both accuracy and timeliness. The second one is a training and awareness. Providing ongoing training to the staff on the importance and the methods of accurate, how it has to be recorded, at what time it has to be recorded in the books. So it will make every person to understand the best practices and the consequences of not following them. So they can have a conducting regular training sessions, workshops, updates on new accounting standards or software tools. The third best practices is a internal control. So to have a strong internal controls which help to prevent the errors and fraud by establishing the checks and balances within the financial recording process. So they can implement the policies whichever related to the duties and regular auditing of the organization. The fourth one is the use of technology. Nowadays, all the organizations are started to apply the latest technologies for recording their transactions. So, leveraging accounting softwares and tools can automate and also have a streamlined recording the financial transactions. By this, I want to give a conclusion. The effective recording of transactions requires a balanced approach that emphasizes both accuracy and timeliness. By implementing best practices such as regular reconciliation, staff training, strong internal controls and leveraging technologies, because of that, business can ensure that their financial records are reliable, up to date and are compliant with the regulations. So this foundation is a very crucial for making informed decisions, managing cash flows effectively and maintaining the overall financial health of the organization. Thank you so much.